Why is gold pumping? Gold is up over 6% in 2 days. Is this the resumption of the bull run, or is this a sick April Fool's joke played on us by the banks? In the next 5 minutes, I'm going to explain exactly why this pump is happening and how the smart money may have engineered it. My name's Nick. I've been a professional investor and unprofessional trader for 24 years. Let's figure this out together. Look, we've been hearing for weeks that the gold bull run is over. It crashed and people sold at like 4K, 4.1K. But is gold actually broken, or did the smart money just need you to sell it to them this cheap? The reality is that the March crash was likely a mathematically engineered washout, and it came down to oil. Let me explain. So high oil prices scared people into thinking the Fed wouldn't cut rates, maybe that they would even raise them. That was the word on the street anyway. And this made yields spike. When yields spike that fast, systematic trading algorithms trigger massive margin calls across the board. Traders were forced to liquidate their most profitable positions, which was gold in a lot of cases, just to raise cash and stay solvent. It was a pure liquidity flush, but that's not all. To make matters worse, the Central Bank of Turkey dumped 60 tons of gold. That's a lot of gold in 2 weeks. It was just panic to stabilize the lira, their currency. Again, this ties back to the Iran crisis. It was a perfect storm of forced selling, but the underlying mechanism has completely flipped as of today. President Trump just signaled that the US military may vacate Iran within 2 or 3 weeks. Now, the reality is that the end of US wars is always 2 or 3 weeks away, no matter where you start to count from. But the markets don't operate in reality. They just choose to believe whatever fiction suits the narrative, right? So today, the war is ending. Gold is pumping. The de-escalation narrative is crashing oil prices, cooling inflation fears, and weakening the US dollar. And because gold is priced in dollars, a weaker US dollar equals cheaper gold for foreign buyers, igniting massive immediate demand again, right? The thing is, will it last? Well, we have seen this exact safe haven paradox before. During acute geopolitical shocks, capital initially flies to the US dollar for immediate liquidity, crushing gold in the short term. But the moment the initial panic subsides, the structural reality sets back in. And that's what we've been talking about for the past few weeks across both my channels. Today, the structural reality is a $39 trillion US national debt. BRICS nations know that this debt is mathematically unpayable without destroying the purchasing power of the US dollar. This is why central banks have purchased like 863 tons of physical gold last year, and they're on track to do another 850 to 1,000 tons in 2026. They are executing a permanent strategic shift away from the US dollar and US dollar denominated assets, really. They do not care about the day-to-day yield spreads or temporary ETF outflows. They are building sovereign reserves that cannot be sanctioned, frozen, or printed away. And this brings us to the ultimate trap. While retail investors were terrified by the March crash, Wall Street banks were quietly loading up at the 200-day moving average. I mean, it literally bounced right on the 200-day moving average. The chart should be on your screen now if the editor's doing his job. So this $4,100 level was a critical technical support, and the dip buyers stepped in aggressively. Now, major banks like Morgan and UBS are maintaining year-end price targets of $6,200 to $6,300 an ounce for gold. We shouldn't really believe their targets one way or the other, but remember when I said that markets choose whichever narrative they like the sound of best? Well, I like that narrative, so I'm going to choose to believe it. But seriously, gold is making a comeback because we're seeing signs of de-escalation. That's a little bit of it, but the bigger part is the banks wanted to load up cheap. They did so down here, and now it's allowed to go up again. The big question is, will silver follow? I'm going to do a video on that on my main channel tomorrow, so watch out for that. Because honestly, if it doesn't go up soon, if silver doesn't follow soon, I think we might be in for some dark days for silver. What do you think? Let me know below. I'll see you in the next one.